Hey everyone, it's Phoebe and welcome back to TradingKey. Now tell me, have you been glued to Nvidia's GTC conference? I know I have. Seems like we're all waiting to see the products Jensen Huang will unveil and spot where the next investment opportunity lies. Lately, the AI trade has entered a new phase. While giants like Nvidia and AMD have been moving sideways, the memory and storage sector has stepped into the spotlight. We've seen a bit of a breather in the rallies for Micron, SanDisk, and Western Digital, but something in the air tells me this is just the beginning. In fact, Jensen Huang has been dropping hints for a while now. At the Morgan Stanley Tech Conference last week, he called out to global memory manufacturers to keep expanding DRAM production, and Nvidia will take them all. Back in January, he called memory storage an under-tapped market. To ensure a steady supply of HBM4 chips, Jensen has been having fried chicken dinners with Samsung and SK Hynix executives in Korea and hosting banquets for supply chain bosses over in Taiwan. Let's be honest, when have you ever seen Jensen play such a humble role? He has essentially turned from the powerful buyer into a desperate solicitor. And the truth is clear. The AI industry's hunger for memory is completely changing the game. Today, we're diving into this structural revolution to see if the memory market has truly entered a new normal where prices seem to only go up. Before we dive in, just a quick reminder that this is for research and sharing purposes and does not constitute investment advice. Understanding the logic is always more important than the trade itself. Why memory defines the AI ceiling? You might wonder, why is memory, which used to be ignored, suddenly Jensen Huang's top priority? To understand this, we need to clear up some terminology. In the world of AI servers, memory and storage handle very different jobs, but both are hitting a wall. Think of DRAM memory as the brain's short-term working memory. It needs to be lightning fast, and data is tossed out once it's processed. The HBM, or high bandwidth memory, that Nvidia is begging SK Hynix and Samsung for, is the super evolved version of DRAM. If standard DRAM is a single parking lot, then HBM is a multi-story parking garage that allows data to fly in and out at incredible speeds. Meanwhile, SSDs and NAND flash are your long-term storage, holding the massive parameters of AI models. In the past, we talked about hitting the memory wall, where CPU power grew much faster than memory speeds, leaving processors sitting idle. But in the AI era, we've hit an even thicker wall: storage. Modern AI models don't just need to calculate fast, they need to store and read data instantly. If storage throughput can't keep up with GPU power, then those expensive chips are just sitting idly wasting electricity. This explains why Nvidia is pushing for AI-native storage, trying to move long-term data from expensive HBM over to enterprise SSDs. As Jensen said earlier, storage is a goldmine that hasn't been fully explored yet. Vera Rubin and the HBM4 race. So then, why is the CEO flying across Asia to buy drinks for suppliers? It all comes down to Nvidia's next-gen architecture, Vera Rubin. In previous platforms, HBM memory was an important component. Now, in the Vera Rubin platform, the 6th generation HBM4 is a critical differentiator. Without enough HBM4, these AI servers won't hit their promised performance. Let's look at the tech. Nvidia's current GB300 supports 288 gigabytes of HBM capacity, which is a 50% jump over the GB200. While the Vera Rubin maintains that capacity, the spec jumps from HBM3E to HBM4. This move from a 1-2 layer to a 1-6 layer stack increases transfer speeds by 1.6 times. But there's a catch. The production difficulty is much higher, which will likely tighten the global DRAM supply even further. Current estimates suggest SK Hynix will secure over 55% of Nvidia's HBM orders this year, maintaining its lead, while Samsung and Micron take about 20% each. However, recent reports suggest Micron might have missed out on the flagship Rubin HBM4 list, potentially settling for mid-range accelerators instead. This clearly shows that without HBM4, Vera Rubin is just a hollow shell. Is the memory cycle dead? Beyond the tech, Have you noticed how confident memory executives have become lately? This brings us to the biggest question for us investors. Is the memory cycle dead? Historically, memory was a cyclical stock. When times were good, everyone expanded production, which eventually led to a glut, a price crash, and zero profits. Then they'd cut production, and the cycle would reset. But that old logic is dying, since AI has broken the cycle structurally. We are now seeing a new normal, where long-term deals are signed to lock in capacity, and prices just keep rising. Analysts at RBC Capital Markets found that a huge chunk of the increased 2026 capital expenditure from tech giants like Google and Microsoft is actually due to rising memory prices. In fact, nearly 45% of the growth in cloud spending in 2026 is expected to be driven by price hikes in DRAM and NAND, rather than just buying more units. Risks to watch. As investors, we have to manage risk. Could AI spending slow down? Will the overproduction curse return? Right now, manufacturers are being disciplined, but if profits look too good, someone might get aggressive and flood the market. There are two specific factors to keep an eye on. First is the difficulty of mass-producing HBM4. It requires an insane number of data lanes, and high yields are notoriously hard to achieve. This isn't something you can just turn on by building a bigger factory. It's a technical war. If it stays hard to make, prices stay high. Second is the rise of SRAM chips. Some thought high-speed SRAM might replace HBM, but it's actually a complementary relationship. Think of SRAM for sprinting, while HBM is for marathons. You can't use a high-speed train to move the freight. You'll still need a high-capacity cargo train. The 3 tiers of investing in memory. If you're looking to position yourself, I've broken the market down for you. The first tier is the HBM core. SK Hynix is the leader with the highest share. Samsung is catching up with massive capacity expansion planned for 2026. Micron is the favorite for US investors due to supply chain security, though we'll need to see if they can clinch that flagship Rubin deal. The second tier is the high-speed ESSD group. Western Digital and SanDisk are the stars here. As AI moves into the inference phase where it needs to read massive amounts of data, these enterprise SSD giants will benefit more than people realize. The third tier is the supply chain. This includes equipment makers like Applied Materials and ASML. To make high-end memory, you need high-end machines, making these companies the shovels in this gold mine. Is this another bubble? Is this price surge truly the end of the cycle, or just another bubble waiting to pop? Let me know what you think in the comments down below. Remember to subscribe to our channel and stay tuned. If this helped clear things up, please remember to like this video and share it with a friend who might benefit from learning this. With that, we'll see you in the next one.